what happens and what happened during the PPP and the pandemic, and how relationship banking has made a difference for so many small businesses and large. This conversation today is with Keith Hardy. Keith is a business banker, correct? At First Citizens Bank. They are a bank who specializes in working with small businesses. They are not the big bank, but they are a privately, I think they're one of the largest privately held banks in the United States, which I think is extraordinary because most of us here are family owned and privately held businesses. And just working with the bank or knowing that there are banks out there that are privately held and understand the needs of the small business is amazing. And I had the privilege of sharing Keith with you guys this morning. Keith, say hi to everybody.
Yeah, and thank you for that lovely introduction. I really, really appreciate it. My background really focused my time and energy on helping people understand the decisions they make relative to money. So the only profession I've had has been in the financial services industry. And ironically, my old college unit director, when I was at Northwestern Mutual as an intern, he's my current financial advisor now for the Hardy household. He's helping me plan for the future with my own little boy. I've been in banking, for the majority of my career, and I chose to come to First Citizens Bank about 5 years ago from a super regional, well-known bank.
And that's where I met Keith at, just so you guys know. He was at another bank, and now he's at his current bank you are a experienced banker.
There you go. Learned a few things. But First Citizens, we are publicly traded, right? But the holding family owns the majority of the shares of our company. So we tout ourselves as the largest family-controlled bank, among the largest family-controlled banks in the United States. So publicly traded, you can buy shares there, listed there. What attracted me to this bank was because I recognized that what I was trying to do at these super regional banks was not quite in their business plan. And, specifically, that when you're working in an organization, there is a plan that you as an employee, should follow. Because of my tutelage and background in studying finance, and because of the advice of my first financial advisor, right? So I told you about my college unit director. He's my second financial advisor. My first financial advisor was my grandmother, who taught me, baby, save. Save all you can, save as much as you can.
Well, all of our grandparents, they said yes. So what exactly tell us what your role is so that they can have a framework for perspective.
Yeah, I lead the business banking. So I'm vice president, lead the business banking team. The Atlanta area. My team and I, we specialize in meeting the needs of business owners that, have businesses that have been around typically from, 5 to 7 years. They're kind of in that asset growth mode. They typically approach us because, number one, they value a relationship within their banking, right? They want to have a one-to-one point of contact with a banker who, in my role, helps lend them money. And my partner, Stan, who you met, he's on the other side. He helps with the treasury services that basically kind of improve cash flow, that move money from a client's pocket into your account, from your account into employees' accounts, et cetera, et cetera. So when I come into the picture, it's typically for an organization, revenue size is less of a focal point. It's really more about industries that historically typically have a need for relationship banking, primarily medical, manufacturing, and professional services, right? Those industries definitely have a need for a banking team. They're high on service or manufacturing of products, and they need bank services that are delivered to them. What's interesting is our approach to relationship banking. And we were kind of talking about, the COVID-19 interruption, PPP.
Yeah. Well, wait a minute, before you go into that, I just wanted to acknowledge that we do have some members of Business Combos and Coffee that are professional service firms. We have some members out there that are product-based businesses. And so I just wanted to kind of chime in and say, okay, this conversation is for you, and that, that's one of you guys' target market. But a lot of banks, you got to make sure that when you're banking with a bank, that it's a bank that loves you. So anytime I talk about a banking relationship, all banks don't like, to work with professional services or restaurants or manufacturing. Most banks have their sweet spot. So I just wanted to acknowledge and say that I'm happy to hear that you guys work with product-based and service-based businesses, and not just looking to work for the big boys. And most of my business combos and coffee are professional services and product-based businesses.
And it's interesting because our clients look like our bank, right? So if you're, we live in a world where everybody, Google, we kind of research people. If you research Keith Hardy on LinkedIn, you'll pull a picture of me, you'll see my, full bio. Ironically, around this time last year, you'll see a picture of myself with a woman, at a large, at a dinner there. That woman is our executive vice president, Hope Holding, Bryant, who is the fourth generation granddaughter of the founders of the bank. Her brother, Frank Holding Jr., is our CEO. So when I talk about who our clients are, it is a husband and wife that own a business, right? It's a father, it's a mother that own their business. And a lot of times the idea is that this business is a wealth creator for a family. Mm-hmm. And the idea is that this wealth will be passed down, this business will be passed down through multiple generations.
Yes, I love that you just said that, because that's what it's all about. We don't go into business and we say, oh, you know what? I want a whole job that I want to work on my whole life. No, we go into business because we want to build wealth and a legacy for our kids and not create a job. So, I mean, I love it that you're saying, yeah, the grandkids are involved, but that's really, even for her, it's probably a training ground, right? The business is kind of like she trained in it. She has to do her stint in the business before she can, cash out.
Ironically, I got the chance to work with the Holdings. Their next generation are working, ironically, in Stan's role in different markets. The family decided that they want their next generation that's going to run the company to start at the ground level and build up, and start with building the relationships that will span multiple generations with a bank.
That is so great. That is so great. That is so great. Because one of the first firms I worked for when I lived in New York, I worked for a firm where we were the accounting firm, which is a 100-man firm for the Newhouse family. And they own Glamour, Vogue, GQ magazine, and most of the newspapers throughout the country. And they were a wealthy family, and they needed a 100-man accounting firm to handle their needs. And I think it's great that from a business standpoint that you have that succession planning and you don't want your kids to be disconnected. And so, they're saying, okay, work in the business because the relationship is important. Tell my friends about what does relationship banking mean, and what would it mean to me, and what does it mean to us as small business owners, and why do we care? Why should I, what does a relationship look like? Do I have a relationship with my current bank? And what does a relationship look like with First Citizens? What does that mean?
Two very good questions. I figured I would kind of define both words, relationship and banking, right? Relationship, defined as the way in which two or more concepts, objects, or persons are connected. That's the, dictionary.com definition, right? In finance, you learn that, and I've learned from my clients who amassed wealth, relationships are key to building wealth, right? No man is an island. No woman is an island, right? So the idea, the concept of self-made, although it's a wonderful, enduring, kind of Americana concept, people that find success typically find success by connecting with others that have a shared vision and, a beneficial relationship, right?
Interesting.
Banking is simply a financial institution that receives deposits and make loans, right? We know that, and sometimes as a banker, we get beat up on this, right? Our clients will come and ask me what a CD rate is, and they'll see the rate on the CD rate versus, the rate that I'm charging you on a loan. We all know that a bank exists because it collects deposits and it makes loans. Exactly. interest difference were not there, then the bank would not exist.
Right.
um,
So the bank's job, and I just actually said this to a client like last week or the week before, that, what banking is the job of the banker is to issue loans. They make money off of issuing loans. And I can't remember what conversation I was having. I was like, yeah, that's how they make their money. So you can't look at the balance sheet of a bank and say that a loan is a liability. On your balance sheet, it's an asset.
yes.
Because
And
it's like cash for you. It's how you make money. However many accounts you have, that's your inventory, right? And so, that's how you guys make money on deposits, right?
as well as obviously offering the services like the wealth management, heck, currency exchanges, safe deposit box, anything kind of related to the transference of money.
Yeah.
So my job as a relationship banker is to understand my client's business such that if we make a loan to that business, I'm making it from the standpoint, if I gave my son's inheritance, right? Business owner comes to me, needs $100,000. If Keith has $100,000 that is planned to go to my son through many wealth management transferring, if it's going to make 18% over the next 18 years, if I'm going to lend you that money today, I'm going to want assurance that my son's future income is going to be returned plus a little something extra. So relationship banking is such that it is very much a two-way street. I need to understand your business. More specifically, I need to understand how your business makes money,
Well,
right?
how is that different than how, like, a bigger bank? Don't they try to understand our businesses? Or, well, I don't know. Or are they just in it for our money? And then when we go out for PPP and we ask for PPP loans, a lot of small businesses got told no by banks that they've had 10, 20-year relationships with. So, what's the relationship difference, Keith? Tell the
So
people.
I try not to speak for others, and that's why you'll hear me use the word I quite often, right?
Yes.
So
Yes.
when I was a manager at a super regional bank, I found myself with a time crunch problem. I had clients who needed to understand things about our service, and I need to understand things about their business. Unfortunately, I found myself trying to, how we're connecting together today, how you and I have connected in the past, taking the client out to lunch, get to understand, talk, build a relationship. That model is not quite the model at a large institution. It's more about volume, X number of units per hour, per day, per what have you, right? And that has never been my approach to anything. My mother is a nurse in the for St. Joseph's Hospital. She's in the healthcare system. Anyone who knows my mother, probably my mother has connected me to many of the doctors that work for the hospital and other places, and they come to me with questions because they want impartial, unbiased information. Example: if you go to a car lot, you're looking to buy a car, of course, the car lot that you're on, that vehicle is the very best. If you need to finance it, some people choose to finance them at the car lot. But what I taught my mother years ago was to go to her bank, have a conversation with her banker, get a loan drawn up that would make sense for her ability to repay for her own debt to income, and then go out and strategically negotiate the purchase of a vehicle, right? Small pieces of financial wisdom that our grandparents passed to us, they still hold true today. And if you have an individual or a team of people who understand the total money picture, then you'll have better decision making. If you've got people who only understand one aspect, well, then you'll have a decision that only has one particular effect.
Yeah, because for the most part, banks lend on, and I have the privilege of experiencing different banks, as an accountant and as an advisor. I went into business initially because, and I like to tell the story about the banker that called me because the client was getting denied a loan, and this client was a doctor who clearly qualified for this loan but didn't get the loan, mainly because their tax return was wrong. It was prepared by a tax preparer, and the numbers were in the wrong space. They didn't have financial statements. It was just a mess, Keith. And the bank, and this banker, which was atypical, this was a large bank, but this particular banker was an extraordinary banker, and she was atypical, and she gave me a call because she had been speaking with the underwriters, because underwriters don't talk to people or don't talk to clients. Underwriters do not talk to clients. Look, underwriters make the decision, which they are the decision maker on the loan, guys, but underwriters do not talk to you. They only talk to other bankers, or like the middle person, the processor. In the middle, and the processor's job. I mean, if you're at a large bank, let me just say this. If you're at a large bank, you need to have a great relationship with your processor and make sure that your processor can tell your story, because you don't have the relationship. The processor has the relationship. The underwriter only knows, what they see in your numbers. And in this guy's situation, because some kind of way she was connecting with the underwriter, and she knew the underwriter was going to say no, but they could clearly see the bank wanted to give him the money because they could see the money in his bank account. So they knew he was a good risk. So, which is what you guys look for. They knew they could get paid back, and they knew that they would make money if just putting this guy, loaning him the money for the building. Well, long story short, he just wasn't ready. I mean, he just wasn't ready to be loaned to. He didn't have the package. And, in that relationship, he got lucky because the banker knew somebody like me who can help him get through and actually get the loan. So we ended up amending the taxes, and he ended up getting the loan because he had to amend the taxes because they were wrong. But then he subsequently, Keith, unfortunately, he got audited for the original tax return, because it was just so many red flags on there. But to make a long story short, because he had that particular relationship with the banker, it actually helped to save his loan. And the banker actually understood that he qualified. His packaging was all wrong. But everybody doesn't have that benefit. So you were saying earlier how, like, when your grandmother went to get the car, the nuggets that was dropped, that even you applied that. I already got my bank loan. I went in my last car. I walked in hand. Look, I already got my money. Well, how much can we find? We're not talking no financing. Don't call your finance department. I have my money. All I need to do is call my bank and tell them that that's the car for me. So if I get happy on the price, we can walk away. And that's exactly how we should actually walk into the bank when we're small business owners, I believe. Can you tell us about the packaging? Give us some nuggets on like what you can do for the bank to say yes, because we talked about that this week. And I kind of gave away one of the nuggets.
No, it's fine. It's fine. So in your example, what happened is you brought up a really key point, and this is a takeaway that I want, and I kind of jotted it down. Credit is credibility. When I take a loan package and I submit it for underwriting, I, Keith Hardy, am putting a bit of my credibility on the line, right? An underwriter's job at a bank, let's be honest, they're designed to say no, right? We understand that banks only make money by lending money, right? The underwriters
designed to say no. If y'all supposed to be lending money, you make money when you lend money.
I use that, anecdotally, but it's their job is to challenge me as the lender to really test my knowledge and see if I understand the credit, in particular, how my client makes money and how we will be repaid. That is articulated in a document called a credit memo, right? Every loan that I submit, there is a credit memo that describes the company, the request, and a lot of finance information that describes how, if I give you this $100,000 today, how we will receive this money, or whatever the amount of the loan, I will receive this money back later. So one of the most important things for a banker who is putting his or her credibility on the line is to make sure that my borrower is honest and truthful but that they understand their numbers and their business and their dynamic, right? So that banker that identified there was a problem in the loan package, it's great that that is truly the story that is extraordinary. It's phenomenal that she went that extra mile. But if you think about in finance, we know that time and money are related, right?
Yes.
So for me to spend the extra time to go back to a client and say, hey, listen, this tax return is not something that I can submit, right? Here is a colleague, here maybe are 2 or 3, professionals who may be able to help you. That is what relationship banking looks like, at your non-super regional banks. It's rarer, but again, I worked at a super regional, and that's what I found myself trying to do. And sometimes you'll get pushback from leaders to say, hey, Keith, why are you spending extra time on a deal that will not fly? Just simply go after the deal that will work. Well, when it comes to how I view my role, I don't just view my role as someone who is making money for the bank. I feel like I need to be empowered to help educate a business owner and just make them aware. What you do with it is wholly your own. The first document, in my opinion, that a business owner should have at the ready always is their personal financial statement.
Okay. Not the business financial statement, y'all. He's saying the personal financial statement, which is your assets and your liabilities outside of your business, but the business is included as an asset on the personal financial statement.
Typically,
if somebody knows what they're doing. A lot of times people prepare financial statements that shouldn't be preparing financial statements. Keith, people don't know the difference between assets and liabilities, income and expenses, and they're preparing taxes. Preparing taxes is not preparing financial statements, guys. So, but anyway,
I liken that to, and this is a good analogy. I liken this to if we're at a dinner party, right? If you are eating your salad with a dessert fork, whatever, that's fine. But if I see you eating your soup with a salad fork,
you don't know what you're doing. We know you ain't never been here before. And so maybe you need some more training before you get to the big people table or the big kid table or whatever. Maybe we need to sit you at the kid table again.
So the action, one has to know their numbers, right? And we have to know our numbers in a lot of different areas in our life today, right? But when it comes to your money, when I was a student at Georgia State, I had a personal financial professor that drove this home to me. So when I was a 22-year-old college student, I'm over here in Excel building a personal financial statement that had a whole lot of debt on it, to be quite honest, right? There was very little assets.
I built mine a couple of times, Keith, and I was like, this thing ain't right. And then you like when you put your assets on, you put your house on it. And then when the market was, remember when the values of the homes were going down? And at one point when I did my PFS, my debt was higher than my assets because my houses were underwater. And so that deeply affected, my personal financial statement. Yeah. And I didn't like it too. So I made some different decisions in life. And so, yeah.
When I was a college student, I had a professor kind of give me this axiom, right? And I applied this in my own personal life. The very first car that I ever financed was when I was an assistant manager at a bank, 2 years after graduating. Mm-hmm. The only purpose of money is to grow. With burying that mantra in my mind, I understand that every time I spend money to buy ties and suits, I am violating the purpose of money. But, we need clothes. So because the only purpose of money is to grow, when I graduated college, I had a little bit of a nest egg, right? I had about $9,000 saved up, just beg, borrow, steal, working extra hours, et cetera, et cetera. I needed to replace my car. And I say I needed to replace it because the car that I had was valued at about $2,000 and it was going to cost me about $6,000 to repair it. So that was not going to happen.
Right.
When I did my personal financial statement and I saw where my money was and what it was doing, when I walked into my bank to ask for a loan, I was comparing their loan terms to what my money was making. Because of my personal credit at that time, because I was able to borrow about 10 grand for an interest rate that was less than what my money was making, I chose to take the car loan. If they would have come back to me and said, in the quick math examples, if they would have come back to me and said, Mr. Hardy, your car loan rate is going to be 8%, and my money was only making 4%, I would have chosen a car to pay cash for.
Okay.
Because they came back to me, they said, Mr. Hardy, we're going to loan you money at 4%, and I'm looking at this money and it's learning something greater than 4%. I chose to take the loan. That is a personal financial choice.
Yes. That's good stuff. So what else we need, Keith? Because we ain't got a lot of time. Now give me some more nuggets that I can get to them. We got the personal financial statement. And what else do we need to have so you could tell us yes?
So cash flow is king, right?
Yeah.
You heard the analogy, cash is king.
Yes.
Cash flow is king. So your personal financial statement, the business financials, right? Year-to-date information. As a business owner, you should have access to last quarter's data. You should have access to it. So that way, when I need a loan from you, or you need a loan from me, you can just simply give me the financials you already have, because you need to be reviewing these. And then as well as 3 years of business and personal tax returns.
Let me pause there, because I got to do my plug, right? Yeah. So what he said was, number one, we need a personal financial statement. Number two, we need to have our last quarter's numbers. That means that you need to, right now, if you're trying to loan money, borrow money for buy some equipment at the end of the year, buy some inventory at the end of the year, basically invest your money or repurpose your cash at the end of the year, basically, and you want the bank to loan you money to make that happen so that you're not using your own money. So what I said at the beginning, guys, I said, you know what? This message here is about being able or learning how to use the bank's money to grow, which I'm so happy you said the purpose of money at the end of the day is to grow. Money serves no other purpose, at least for me. I mean, I don't serve money, Keith. Money serves me. Mm-hmm. And all money can do for me is grow. And you said something earlier that relationships are worth more than money. I've realized that my relationships have given me so much more assets than my money has. In life. And so relationship banking, that relationship can help you get into doors that normally would be closed to you at a bank sometimes, right? If the bank just knows that, in my example's case, that, hey, he just chose the wrong person to do his taxes, right? So if what you said was right now, and let me go back to my point. Number one, you have your PFS. Number two, y'all need to have your financial statements. You need to have your accounting done today, so that you can give that to the banker. And then he said your last 3 years tax returns. Okay, that would be your 17, 18, and 19 tax returns, right? Now, I got a special for you guys that I'm going to let you guys know about. If you sign up and I'm gonna put a promotion out there, because I had the privilege of having a conference call yesterday with an accounting software. And basically what I'm gonna do is I'm gonna offer your accounting software for you if you prepay this, and you only can use this particular software. But if you're a person that you're just tapping in your nuggets and you trying to do your stuff yourself, if you prepay for your taxes with us, and you put down a certain amount of deposit, I'm going to run my numbers. I will give you the software. And this is an offer that I will only do for a limited amount of time. So be looking for that. I'm going to drop it in. And to add on top of that, I'm going to give a course on how to mine your own data, meaning how to take the information from the bank, put it into the accounting system, right? So that we can have a starting point to give Keith some good year-to-date numbers. Now, you don't have to do your own numbers because I know a lot of my clients, nobody likes to do their own numbers, but some people are like, look, I don't need an accountant because I already know what my numbers are looking like. But you got a business and you have no accounting system. You got a business and you can't give the banker your last quarter. And then you wonder why you didn't get the PPP. And let me tell you why so many people didn't get the PPP. A lot or missed that first wave of PPP. What I saw, Keith, was a lot of small business owners, and I'm kind of pivoting over here for a second because I have to say this at this time. A lot of small business owners was not paying themselves, number one, and I'm not saying that every business needs to pay themselves. If you are an LLC, single member owner LLC, your Schedule C serves two purposes. It is your W-2, it is your payroll tax returns, actually three purposes, and it is your business income tax return. Let me say that again. It is your W-2 from your business, it is your payroll tax returns, and it is your income tax returns. So what had happened, and Keith, back me up on this, what had happened was when PPP first came out in the legislative mandate, really only it only met the what do you call it, the look of an S corp or a C corp. It was not designed originally for this. And I'm saying they said that they were doing it for the single member LLC. And, you know, I saw somewhere that there's 2.8 million Black businesses, and 2.7 million of those 2.8 million are single member LLCs.
What was interesting from a banker's perspective is I remember that go live date, and it was like a Friday, and it was like April 5th, let's say. But when I read through the setup, yes, you had those companies who had payroll, their applications were designed to go in that first week. The companies that don't have payroll, like I run a very small little drone company, so I am was a partnership. So a company like mine,
you said that first week, Keith, the money was gone in one day. So if you didn't have the 941, which is the payroll tax return for S corp or C corp, or for people that run payroll, if you don't professionally run payroll or formally run payroll, then you did not get that first round because you didn't have a 941. And yeah, didn't even know what it was.
That second week, so it was like the first Friday was designed for, people with payroll. That second one was designed really for people, who run a company who don't have payroll. The problem became is that there was an estimated $1 trillion of demand for which the government rolled out a program, that had funded with 500, 600 billion in the first round. Then they today, everyone has received their PPP funding, hopefully, right? But the people who didn't, they learned an unfortunate lesson. If you have, especially from and this is what I learned as a banker, on a government form, if there was a number on that PPP application, you had to give me, the banker, a document to support it. What I discovered is that many business owners had a need for money because of the pandemic. The government had a plan in place that, although it was rolled out not very efficiently, there was money there available. People did not have the documentation that I needed to give to the SBA to say yes.
Yes.
And that is what.
Here it is right here. I'm gonna put this document, this hand one and this hand two. This is the government. Y'all got a need right here, right? The government is over here with the ring on my finger with the money. And you don't have this document in the middle to exchange for it to come from this hand to this hand. You need some documents, guys.
So going back to
in business, and the documents ain't your paper. It's not the money that's showing up in your bank account. Like, you cannot run your business by your bank account. You cannot get access to capital by your bank account alone. I mean, you just can't. You got to have good accounting. You got to have some tax returns. That's the basis of it. And those are things that you should be doing anyway. It's like brushing your teeth every day. I mean, we wake up every day and we brush our teeth. Like, Are you brushing the teeth in your business? Is your business teeth clean or do your breath stink? Oh, I like that. I'm gonna have to use that again. I'm gonna have to use that again. But yeah, because that's what's going on. We're in business with funky breath. And and being like, oh yeah, we cute, we dressed up, we got money and we're selling, but our book, we ain't got no books.
A lot of the takeaways that business owners had, and so my personal cell phone during PPP, my voicemail was filled every 6 hours, right? Our bank did $5 billion in PPP lending. We outpaced some other banks that are larger than us, right? And we're talking about loans sometimes the size of 30, 40, $60,000.
Mm-hmm. I saw y'all at the top of the list. I will say, guys, listen, Keith is with First Citizens Bank. I don't know if I said that already, but First Citizens was at the top of the list, and they are not even a big bank. How much did y'all lend? $5 billion?
$5 billion.
Okay,
and we're
I'm
talking about,
Keith.
and I'm talking about,
Keith.
and I'm in the forgiveness process now. So again, it's another, we need documentation to forgive it. And banks are very incentivized to forgive a 1% interest rate loan, right? So anyway, well, one of the key takeaways that
y'all are getting incentives to forgive these loans. Now, again,
no.
back in the situation again, y'all want to forgive them.
Yeah, what I'm saying is that we want to forgive the loan, right? This is, some people have opined that the banks want to hold on to the, no. Believe me, we want this bank, this loan is not the best performing asset by design, right? So if you're with your banker now, we are simply the conduit to get this sent to the SBA. So understand that this is a government loan program, that banks are simply the conduit. So sometimes the voicemails that I got during the initial application process, sometimes where, people, I understand that.
Tell us what they said. We family. Give me a little bit of dirt.
People were very, there was a range of emotion.
Mm-hmm.
And what I can say is that range of emotion, that frustration, that anger that was felt, a lot of times it was based on, their perception of what perception. At the end of the day, what every business owner has learned after PPP, and it's something that I was telling clients even before this pandemic, was ever known about, was that your business should have access to working capital. Always.
And access, underline in bold, access. You don't have to have it, guys. You just got to have access to it. Access looks like a line of credit. I mean, I posted, Keith, and I'll say this earlier. A lot of times I hear from small business owners, I don't need money. I don't need the bank's money. And you don't have to have their money, and you don't have to pay them interest on their money. But if they will give you access to their money, that means a lot. So you need to have access to the money. You don't have to tap into the money. And you can circle back to Keith's example to say, what's the cost of this money? Is it cheaper for me to take the money and borrow it from them, borrow 10,000 from them that I can grow to 100,000, or sit here, try to make 100,000 on my own? How long is that going to take? And then take my 100,000 and put my 100,000 to work. That's just a lot. Okay. If the bank is going to give you $100,000 and they're going to give it to you at 3%, 4%, sometimes 8%, sometimes the cost of that capital is nothing compared to what that 100,000 will do in your hands in the next 6 months.
Well, I will say that, I love this professor. If I'm a fan of, I have a favorite saying, ceteris paribus, right? It's Latin for it depends.
Depends. I'm going to start saying that because we use that a lot in this mastermind I'm in. They're like, it depends. It depends.
Every finance.
What do you say? Ceteris what?
Ceteris paribus.
Ceteris paribus.
All things held equal, I think is what it literally translates to. But meaning it depends, right? So in the idea, because the only purpose of money is to grow, one would not borrow at 10% to only make, if the money would cost you more, like you only are going to decide to borrow if that is a benefit to you, not when this tie. So think about when we buy goods, right? I traded, I don't know, maybe $20 for this tie because I perceived the value of the tie to be $25, right? If I thought the tie was only worth $10, and I would never pay $20 for it,
Never
right?
pays
These
$25,
are
right?
these are these are core financial behaviors that sometimes we get away from in pursuit of things that don't really matter. But what we learned from PPP was, number one, relationships are key, and there are typically, with any business, there are typically 4 to 5 relationships that benefit them. Number one, you hit spot on. It's a phenomenal CPA, right? You need someone to understand the numbers, present the numbers, dissect the numbers, and get information to you, the business owner. Number two, some sort of attorney, gosh, especially in different industries, there'd be contracts to be drafted. You may need someone to look over some legal matters. Three, obviously, because the only purpose of money is to grow, the only reason why a business would exist is to make money. There will be someone charged with wealth management, and it's typically on your personal side, right? Our bank is unique in that we have a wealth management team that takes both the business and the individual and marries that together. Because if you think about it, example, my wife and I started a small little company years ago. We took our personal savings and we invested it into a business. Because the only purpose of money is to grow, I knew what that money was making at that point, and I perceived the business that we were going to create was going to make a higher rate of return, right? So a wealth manager is a good person to help, with your personal financial statement and understanding what your long-term plans are to help pave the way there. Likely, fourth person, you'll have a consultant, a specialist of some kind. If you're buying commercial real estate, that might be obviously a commercial real estate broker. But someone who is handling a transaction, or a specialist that may be in your niche. I know a lot of doctors will employ, a practice management specialist, someone to help them kind of grow their business. And the fifth person in that pantheon.
So you said the fourth person is like an operations person.
Well, a consultant, a specialist, or someone who help facilitate a transaction, right? So an example of, if a doctor or if a CPA, or if a business owner is buying a piece of real estate, that person might be that commercial real estate broker, right? Someone who knows the market.
Oh, I got it. So it's like you want to, I know exactly what you're talking about. So what he's saying is you need to have if you're going into a restaurant business, you need to have a restaurateur on your team. If I'm going to start a restaurant, I might love restaurant, and my grandmama might have a slamming mac and cheese and pound cake that I know the whole world will be interested in. Keith is not interested in loaning to me.
Yeah,
he knows that I am all things numbers, all things business, and that's what I do. I could slam a business, right? But I'm not a restaurateur, although I could. Right?
I'll use that's a good example, because we know the restaurant industry is hard to lend to just because of the high default rate. My wife and I started a catering company 5 years ago, right before my son was born. She hired her husband as the CFO. And you haven't lived as a financial professional until you have done cost accounting on a lasagna. I had to take my wife's lasagna recipe and I had to quantify the amount of cheese that she and my brother were using in the ingredients, the amount of noodle. So I would have to go to Restaurant Depot, the cost of a can of tomato sauce. Okay, honey, how many ounces of tomato sauce are you using? She's like, I don't know, a dash here. This. I'm like, oh my God, how much is a dash of salt? It was the most interesting thing, but I had to build a mathematical model that made sure that every time I sold a tray of lasagna, that we got 3 times, a markup on it, right? That was my job.
You got to know them numbers. And cost accounting, I will tell you, Keith, don't even feel bad, because a lot of accountants even struggle in cost accounting. Accounting majors all accounting majors are not the same. Just like all attorneys, you wouldn't hire a patent attorney to do your divorce. True. I mean, it's like, or a divorce attorney to represent you in business court. Accountants are the same way as well. All accountants don't do cost accounting, and we all studied it in school. But cost accounting is the that weed out course. Serious. I mean, I will tell you, I didn't take it seriously, because my parents aren't accountants. I started doing accounting at 16 years old. I was an enroller. My first job was at 16 in Johnson & Johnson Vistacon. And so when I took cost accounting, it wasn't because I worked, in my mama's, concession stand or anything. And my mama didn't cost. Okay. We had a concession stand. All my mom did was she went to cash and carry. They went to Sam's Club or Walmart, whatever at the time, and they sold concessions, right? They didn't say how much it cost us to sell. She made up the prices, right? Because that's how most business owners do, right? She made up the prices. So I said all of that to say that I didn't learn cost accounting. Although I grew up in a household where my mom would make me roll quarters. Like my mom was the best accountant, but my mom was a bookkeeper. My mom didn't know nothing about no darn cost accounting. I mean, and for that reason, I blame her for me having to take cost accounting 2 times in college. I took it twice because I said I will not be defeated by cost accounting, right? And plus, I blamed the professors. I said he wasn't right. He just wasn't right. And so back then, I was like a student leader on campus, and my first cost accounting professor told me maybe accounting wasn't for me because I was too into relationships in college. You know, I was like really, I was student body vice president. I was AKA vice president. I was National Pan-Hellenic Council vice president. And he told me in my face, he said, frankly, I just don't see accounting majors running for student body vice president. So maybe you should pick another major. And when I passed my CPA exam and I was working for the big 4 accounting firm, Keith, I wanted to send that man, I was about to call him something. I was going to send him a letter to be like, really, is this not what accountants look like? And then when I started my firm, it really is this, and I'm a specialist, so I'm a damn good accountant. So
I always made it. I said, God bless all the accountants. I was a finance major in college, so that means I did just enough accounting to know that this is not my forte. For me, I'm always forward looking. But what was interesting is I was helping my wife with this business. Is in my mind, I saw what it takes to labor to make food and prepare food, right? And in my mind, there was no way that I was going to price any of the food that she was selling that was not going to reward her for that hard work, right? You know, her being in Restaurant Depot, her being in the shared kitchen all hours of the night, cooking and preparing things. But what was interesting with me, my background in banking, what this did is this allowed me to have a little bit of edge of people who, you know, may not have a banker in the family or helping run the business. I started targeting, I would do like financial seminars when I was at the other super regional bank, and I would bring in Chick-fil-A and local pizza. We would have a financial literacy event aimed at teaching millennials how to save money to buy homes. And this was in the 08, like kind of like post the 08 debacle.
They gave me one on my lunch break.
So, you know, teaching people how to save to buy homes, teaching people how to, you know, save for long term. So I would hire, you know, bring food in and give the soup in the sermon model, right? So ironically, you know, the business that my wife and I started, you know, I started targeting financial professionals like myself who were responsible for bringing food in, right, to give some sort of meeting. Then also people in the medical field as well. Can you believe that our catering company, I had accounts receivable? So I actually had an accounts receivable because, of course, at any hospital that you provide food to, they will pay you, but it's going to be a 2-week process to get a check cut, right? So I was using my personal line of credit, our corporate credit card, to buy inventory today. And I would certainly mark it up to make it profitable such that when 15 days and that invoice got paid after the food was consumed and they loved it, because we had easy, payable, flexible payment terms, they hired us consistently. And I kept my wife and my brother and our family, they were working together, providing great food. And I made sure the financial system worked to where I was not dependent on needing cash today to buy the inventory, right? The bread.
That's smart.
So I was able to kind of outpace.
So you're saying that you asked the bank for enough money because you knew how your inventory was going to turn.
Well, see, for my personal financial statement, right, I always make sure that I have personal access to credit. So I have always had a personal line of credit at, you know, any bank I've ever done business with. So at any point in time, I can always grab 50 grand and say, here's what we are going to do, right?
That's a nugget. So you're saying like do a personal line of credit. So you just can, that's the access part that's the access.
So I could have taken the money to start our catering company from my 401k, from my Roth IRA. But at that time, when I was meeting with my financial advisor and I was looking at the rate of return on that money, it was enough of a return that I said that money is going to stay where it is. I'm going to borrow from this line of credit and just pay it back, right? And then also, you know, my business credit card was 0% interest, obviously, right? If you pay the balance off in 30 days. So with some of the larger hospitals, it might take 15, 20 days to get a check back. Well, that's fine. As long as I can pay this credit card off, we are.
In that time, you will borrow the money because you already know that you would incur the cost because you know you could pay the money back, and it would be zero cost to capital.
And my staff, which was my siblings and my wife, right? They never had to go without money because I always had a pool of money. So when payday came every week, there was never a time when anybody who worked with us they had to wait because they had to wait on their paychecks because we had to wait to get paid for our client, right? Again,
and
that goes back
about knowing your numbers, though, Keith. I'm just gonna keep going back into knowing your numbers.
Yeah.
Okay, so I got one more thing for you because I don't want to run out of time. You gave us 4 things, and Malika, we love you, Malika. Thank you for the list. Okay, so you gave us the critical people we should have: a CPA, an attorney, a wealth management, and a area specialist for our type of business.
Yeah.
Was there a number 5?
Yes.
Okay,
a great banker. A great banker.
Oh, you put yourself last. Thank you for putting me first.
Well, honestly, yes, because I can do nothing without the package from you. So that package looks like, number 1, me personally, I am a business owner still. We closed the catering company. My wife is focusing on our little boy right now. But our personal financial statement, that's my responsibility. I maintain that, right? I'm the business owner. I've got that up to date. The 3 years of business and tax returns, business and personal, right? You prepare that. I'll make sure I have it available, right? Hopefully. I know, CPAs probably get annoyed anytime you have to send documents over. I'm sure you give it to everybody their tax returns once they're completed. But if you've got it or you can get it, that's important. Year-to-date financials, right? We are in December. So if a business owner is coming to me for a CapEx expenditure, they need to buy a piece of equipment, I expect to have nothing less than at least mid-year numbers, right? But we should have Q3 financials. So we should be seeing what 2020 looks like from Jan 1. I would expect to see really through 9/30, right? And that's the credibility of the business owners looking to borrow money from me. But also a business debt schedule. That's something that a CPA will typically prepare. But what's different in the debt schedule than just the balance sheet, the liabilities, right? I'm lending money based on the cash flow of the business, right? So I need to understand the payments that this business has that are going out. So that business debt schedule is critical so that I understand what obligations you have now and what that will look like with this additional debt so that I can ensure that basically you have enough money to cover your expenses, right? And then of course, if there's, so that business debt schedule, year-to-date financials, 3 years of business tax returns and personal, and likely, if we're financing a piece of equipment, then, I need some information about the equipment, right? So a sales invoice, et cetera, et cetera. It's that time of the year where everyone is buying a brand new high-end luxury vehicle running through one of their LLCs that they structure specifically to hold that asset. I'm collecting financials for the main operating company so that they can go out here and get this new piece of needed equipment that Mercedes manufactured. They'll own the vehicle for 3 years with the warranty plan, and they'll sell it off to someone else later on. Rinse and repeat. Or they're buying that quarter-ton truck, or that's possibly the equipment that is needed for the practice of the business, et cetera. But CapEx, right now, these are conversations that should be had with your banker and your CPA, probably starting back in October. What do you need to buy by year end? And then what's on the horizon for Q1 of 2021? So the conversations that Keith is having right now with his clients are all centered around, where do you think you're going to end 2021 or 2020? What's needed in 2021? When is a time for us to collect the financials so that we can review the cash flow to see if this business, if this loan can fly before we send it to underwriting. Those things are key.
So let me ask this. So I wrote down what you're saying. So essentially, to ask for money from the bank, we need to have our personal financial statements. We need to have 2 years financial statements And a year-to-date financial for at least through year-to-date September, 3 years tax return, a debt schedule, and an invoice or PO if we're trying to purchase a piece of equipment. Are you guys a working cap? And I ask this to bankers all the time, and I didn't tell you I was going to ask you this question, but hopefully I don't put you on the spot. But are you guys a working capital lender, or are you an asset-based lender?
Very good question. We are all about global debt service, right? So we are making sure that working capital, I need to know that this loan can be repaid to the tune that the bank does not want your assets. Our bank, there are some lenders out there that are asset-based lenders. So as long as the collateral there is secure, they will give you a loan at 11, 10, 12%. I have, and then I typically will get a package from a CPA who maybe has brought a new client on board and is looking at their business debt schedule, and they are looking at the interest rate, and they say to themselves, we have a problem. So now we're looking to refinance it. But yes, we are very much a cash. We are lending based on the cash flow of the business. The collateral, obviously, I can't lend you $500,000 on a piece of collateral is only valued at 300. That's not going to work either. But what's key, and that's why I need the financial information that I'm looking for, is because I need to understand how cash flows through the business and through you as a business owner.
Mm-hmm.
In my own personal world, I teach anybody that knows me on that personal financial statement, you're saying how you can contribute money toward your business, right? So in theory, when I'm running the numbers, I should see, when I'm doing a cash flow equation, I'm trying to bore anybody to death, right? But this is the secret math.
Okay.
The business debt schedule shows me the sum of all of your payments for a year, right? That's the denominator, that's on the bottom. Let's just easy math. You've got payments for equipment here, building here, other things. Let's just say it equals $100,000 in a year, right?
Okay.
The bank, every bank is going to be different, but if you are spending $100,000 on payments, then we need to make sure that you've got something greater than $100,000 in cash coming in, right? On the numerator. Okay. So a good setup will be if you've got $100,000 in debt payments going out, there should be $125,000 at minimum for EBITDA plus positive cash flow from the borrower, from the individual. So I'm looking at a combined cash debt service, right? I'm looking at the business plus the individual.
Okay. And I'm defining EBITDA in the comment sections, y'all. That's earnings before interest, taxes, depreciation, and amortization. Okay.
So net income plus depreciation plus, just adding the non-cash items back. Thank you. I don't want to bore everybody to death, but
no, that's fine. I didn't need this, so I was like, it's in the comments.
So I use that example. We know on the personal side, right? When you want to go for a home mortgage, we know the debt to income number, right? We know that if you want to borrow money for a home, you need to have a debt to income of something, 45, 41% or less, right? Because for every dollar that comes to you, you should not have more than, in theory, you shouldn't really have more than 41 cents going out in debt payments, right? Because the only purpose of money is growth. So how is your money growing if you are making other lenders wealthy? So that's another great tool for a business owner to really understand their debt schedule so that you don't over leverage your company, right? The payments.
So are you guys, I'm sorry, are you guys considering the PPP on the debt schedule if it's going to be forgiven?
That's a good question. I'm asking the question, have you applied for forgiveness? We are anticipating, and no matter who the lender is, we anticipate that's going to be forgiven. The EIDL loan, I'm asking what that payment is because obviously that EIDL loan will be around for possibly 30 years or such, right? So right now when businesses are coming to me, we have to have a very candid conversation. How much did you borrow for PPP? I'm going to assume that that's going to be forgiven. So I'm not really including that into that debt calculation. But that EIDL loan, yes, I need to know what that payment is.
And
Such
does it,
that. Mhm.
I have all these questions going on and we don't have any more time, but look, I have this question. So do you guys frown upon it negatively for businesses that did get the PPP or the EIDL, or let's say you have two businesses that come to you, they're both equal in every way, but one took the PPP and the EIDL and the other one, got the same level of success but without it. How do you look at that as the banker?
I'm gonna answer your question like this, from what an underwriter is looking at. So
Mm-hmm.
you've got a PPP loan and you've got an EIDL loan. That means you got cash on the balance sheet, right?
Mm-hmm.
What was your cash level before those items hit?
Nothing, because some of these people got this cash just sitting in the bank. They was just being greedy, Keith. They were just being greedy. They just got that money sitting over there. I got so many people I know that they got the money, like $100,000, $80,000. Now, sitting in the bank, they're doing nothing with it because they're scared, or they don't know what to do with it, or they don't know if they're going to have to give it back. I think right now, that's a great segue into a conversation that we probably need to revisit later. But if you got PPP, which a lot of people do, got that cash sitting in, and it goes back to the conversation that you were saying earlier. What's the cost of that capital, even if the money doesn't get forgiven, right? Because you got over $50,000 and there's not any automatic forgiveness out there. Your money may not get forgiven, but you're going to have to pay it back at 3% or 2%. That money is doing nothing for you sitting in your account.
So
You
what's
need to find
interesting
something to put that money to grow.
is, and anybody who knows me for the last, like I said, decade or so, but especially I ironically, I picked up more clients calling me looking to move their relationships from conversations that I had this time last year before COVID ever hit. Because I, as a banker, am constantly trying to get business owners to understand what is your liquidity, right?
Mm-hmm.
The current ratio is what your balance of payments for current liabilities versus the current assets. So cash, inventory, and anything else that be converted to cash quickly. Business owners need to understand that, especially after COVID has hit, because banks have seen the impact to businesses that has hit, the liquidity test now more than ever is key. You need to have liquid capital, liquid cash available, which goes in the face of some business owners for years who said, we pay cash for all our equipment, we don't want to borrow any money. Well, okay. Many of those business owners that told me that, if I'm calling and looking to develop a relationship in December, so this time last year, many of them who told me that, they chose to buy, equipment, $100,000, $200,000 of equipment in cash. Okay. When the pandemic hit, some of those business owners realized that they took a liquid asset and they tied it up in buying an asset that they could have structured small equal payments and kept more of that cash on hand. That is the reason why there was so much fear driving behavior. And this is my opinion. I'm not, speaking for anyone else.
Talk about the fear, because I talk about it too. I love this. Keep going. Because you just hit on a nugget. I need to have a thing that go boom. That was a nugget. Because you didn't see me what I posted, but I was like, you got to use other people's money, because if you take your liquid capital and you go and put 200,000, we're in December right now, and you're talking to, we have an audience of business owners here live, and we'll have some that come back that watch the replay. And if you're watching a replay, put replay here in the comment section for me. But a lot of them will basically take their cash that they got sitting in the bank right now, mm-hmm. and take that and put it into something that's not liquid, which is why spend it on a car or some equipment when you can get financing easily for that. This is the end of the year right now. Most car companies, and I'm just saying because that's the lowest hanging fruit, right? A lot of people are like, can I go get a car for my company? And I'm like, sure, do it. And so, but that's the lowest hanging fruit, because right now, auto companies are giving a 0% interest, 1% interest. That is the cheapest time to buy a car right now. But you got the money You go and go, boom, put down the cash for the money, and you didn't even need to do it because nobody's going to be running to give you cash so that you can now cash out of that asset. It's hard to cash out of assets. Think about when you sell your home. Your home does have cash, but it's not a liquid asset. Homes are not liquid. Cars are not liquid, right? But you do have liquid assets like inventory, right? Those things are liquid. You know that if you buy inventory and if you understand cost accounting and you understand your inventory terms, you know what's going to happen with that inventory in the next 30 days, 60 days, 90 days, whatever, right? So,
Yeah.
So go ahead.
Well, I was going to say you hit on a lot of different things there, but really it gets and I understand that debt is literally a 4-letter word and metaphorical 4-letter word for some people, right? Some people will choose to avoid debt at all costs.
All cost is not good cost.
Finance,
there's good cost and there's bad cost.
It's interesting. Finance is more behavioral and human psychology than it is really like math and science, right? Mm-hmm. It's interesting. Finance works as long as your personal belief is, if you believe in paying cash for everything, great. Then you probably are sitting, hopefully, and are very liquid. So if you spend, $70,000 on this CNC cutting machine, then hopefully you have 270 grand, available, right? Because you did not use all your cash to go and buy the equipment. So if you choose to spend cash on everything, then I hope that you have stockpiled enough cash to carry the business if there are lean times. When I was a child, I thought my grandfather had a farm because my grandfather had a backyard and he grew in Montgomery, Alabama. He grew tomatoes, turnips, different things in the backyard. I learned to view money as a seed. Mm-hmm. In today's business world, I see a lot of people who seem to kind of, if I liken money to a seed, they seem to be either today trying to eat the seeds rather than plant them and eat the tomato later. Mm-hmm. Or number two, they seem to believe that they can plant their seeds in December and they will grow into a harvest in the summer, right? The environment on this planet has a way of telling you when it's planting season and when it's harvest season, right? If you try to go against that, it's hard for your family to have food. So if nothing else, what I hope to convey to people, especially business owners, because you know what, even myself, I'm an employee. So in theory, I can go and make terrible decisions with money. And as long as I keep my job, I have some money next month to make a terrible decision with. But for business owners, you are charged with not only being financially responsible for your business, but that business impacts the livelihoods of other individuals who work for the company to receive a paycheck. So it's more planting than hunting, right? But the idea is that, that pantheon of professionals, it's always a good idea to consult people who are experienced in whatever kind of aspect you're looking to do, right? One of my favorite books is between Robert Kiyosaki's Rich Dad, Poor Dad, George Clayton, The Richest Man in Babylon.
Yeah, I love that book.
These concepts are, and it's interesting because especially with The Richest Man in Babylon, I'm a father now. I got a 2-year-old, right?
Yes.
So sometimes my family will ask me, well, hey.
I have not heard anybody mention The Richest Man in Babylon. As an enroller, I started young in business and corporate America. We read Robert Kiyosaki, Rich Dad, Poor Dad. We read Think and Grow Rich and The Richest Man in Babylon. Those books I read before I was 20 years old. That Richest Man in Babylon, oh my God, I need to read it again because a lot of the things that I apply, I don't even know where I got some of this stuff from, Keith. But, yeah.
Yeah, we and now that I'm a father, my goal is to, now my son's 2, so he's not going to understand a whole lot of the concepts there, right? But, the idea, there were like 5 rules for the law of gold money at the time there, make thy home a profitable investment, own your house and, have it grow in appreciation, right? Seek consultation, consult information about precious jewels, from people who specialize in jewels. You don't go to a brickmaker to ask about, jewelry, right? These
Yes,
are,
talk about this thing.
and so what happens is in our personal and our financial lives, we know what we're supposed to do because our parents and grandparents taught us. We
Mhm.
just don't see the application of it, right? We don't see what the overarching long-term decision making is. So at the end of the day, hey, I'm not someone, I'm a banker. I'm not going to tell someone how they should view money. But as an example, I chose to move my career to a bank that in every economic downturn, this bank has acquired other banks and it's grown. I was a college student in 2004, and my professors told me about an economic collapse that was coming in '08 and '09. They told me to save cash, build my credit, and get on the buying side of the economic collapse that is now in history the Great, Recession, right? Those same professors told me that, according to the notebooks in this wall back here, they said, hey, after '08 and '09, don't worry, the next 10 years will bring another challenge as well. So if you miss that one, get on the buying side of the next one. My wife and I have bought a home at every one of those downturns, right?
Mhm.
Because I recognize that the only purpose of money is to grow. So at each one of those opportunities, I got to borrow money for cheap to buy a place to house my stuff. And then in this most recent downturn, heck, my wife and I, we were, thank God for our real estate team. So that, the number 4, that consultant, we had a team that helped me sell a townhouse and buy this home in the middle of a pandemic.
Yes.
But why was I so motivated? Because interest rates are just so low. I mean, I have a good friend of mine who I advise, she's a doctor. Heck, she bought a house in like March, didn't even move into it until like June. Her rate is like 2.9 on a mortgage, right?
You get more house. The lower the interest rate, guys, the more house you can get.
Or, reduce. Now, I do kind of miss my old townhome because I bought it for less than $100,000 and
Oh,
it's
Jesus.
in the city. My mortgage payment used to be like $500.
Oh
I
my
mean,
God.
so I got the chance to take what my professors taught me and apply it for me personally. And I have ensured that every time I need to use money, it's going to get me something that is worthwhile. Now, the home, unfortunately, I don't have only a $500 mortgage payment now, so I've got to be more wiser with it now. But at least I got the chance to buy a home for a price that I felt like was more valued because of the impact of the pandemic. There was some softening in some real estate prices, but nothing else. The financing is what I got that helped me feel like I won. So
Well, Keith, you've hit on some great points. I mean, even the point that you just said, and that's a whole nother topic also, in selling your house. When the market turns to a seller's market, oftentimes in our communities, we are taught to own a home and hold on to your house. And grandma's house stays in the family forever. Grandmama might have paid $5,000 for that house, and nobody cashes out on the house. And sometimes the house get held up in probate, or the house gets sold for dirt cheap during regentrification, but that's a whole nother issue. But
mhm.
oftentimes, we're taught not to cash out of our homes. I love it that you pulled your equity. You cashed out, you made your house liquid. Because if it was in the city right now during this seller's market, and you were doing under $100,000, let me hold some, Kurt. Let me hold some, Steve.
what,
Because
what
I know
was
you
funny is
got
that
some money right now.
I remember when we were looking for that townhouse, I told my realtor then, I said, listen, I want to buy a house that, got an Atlanta zip code. It's less than 100,000 and it's like kind of like, in on the perimeter. So what's interesting is, I didn't know a whole lot about real estate trends and things like that, but I was
Mhm.
a banker and my office was in Buckhead. And a lot of my clients that worked in Buckhead, they were buying homes in a little city called Brookhaven, right? So outside of Buckhead.
Mhm.
And gosh, as a young man in banking, when I saw the prices for those homes in Brookhaven, I was like, oh wow, can't afford that.
Those are
So
expensive.
I just, strategically picked an area, just trying to follow that very same idea, right? Um, that all that being said, I consult my own financial team, right? So I'm on the phone with my CPA, I'm on the phone with my financial advisor. I'm smart enough as a finance professional to not try to do my own retirement planning and things like that. Nope, that's what Scott
Mhm.
does for me. And when we had my son, Scott helped me. He introduced me to a trust attorney, right, an estate attorney, so that, to your point about things going into probate, my goal, is constructing a will and helping build assets that will benefit my next generation. And that leads me back to kind of another point, a little nugget, and this is Keith's opinion, not gospel. But when I'm looking at a personal financial statement and I'm looking at all these assets, I'm looking to see if there are heirs, like children. So there's one column on a financial statement that I'm going to that kind of helps me understand the psychology of the borrower. And I'll say it's kind of related to the richest man in Babylon, right? Mm-hmm. If you haven't planned for an eventual departure from this earth, right, that will benefit the ones you love and your heirs, if you as a business owner have not done that planning for your heirs, then I am certain that you won't do it for my loan. So this becomes...
Keith, I'm happy I got that line item, because I was like, but there was a point in time that I did not. And gosh, I never even thought of it that way.
Right.
That was another nugget. Okay, Keith, we can't get no more nuggets. Okay. So look, this is Business Convos Coffee. I was just trying to invite everybody to be a part of the conversation. I gotta get off. We gotta run off because I got more appointments to go to. And this was like great coffee. This is like one of the best, Keith. I'm so happy that you decided to join us. I'm gonna let that be like the last plunk in the bucket that we've given for today. I'm so delighted that you've decided to let me bend your arm and say, no, it's just coffee, just me and you. It's like, it's like pre-pandemic, Keith, before, come join me. It's like, us meeting at Starbucks, just talking. And this, honestly, guys, is what relationship banking is all about. This is what I do as an accountant. Obviously, as a CPA, bankers often, financial planners, wealth managers, those type of people always connect with me to have conversations, want to know like what my clients are talking about. And I'll talk to them, but like normally I'm like, I'm tired of talking to y'all. What do y'all want? And so, in this relationship, I was very excited to talk to you last week, Keith, and I really like the things that you were saying, so much so that I wanted to share it with my community, because I knew that, you would drop the nuggets that you did drop today. And I would love to have you back, or Stacy back again. Stacy does relationship banking from like, Keith, make sure you get access to the money. Once you get the money, then like, what products the bank has so that you can maybe, turn your money quicker, or like what products you like, merchant services and all those types of things that the banks offer. They have cash management systems. Banks don't only hold money, guys. Banks do a lot more than hold money. Keith mentioned the wealth manager, the having a wealth manager on your team. Actually, I think Keith, you correct me if I'm wrong, you guys have a wealth manager that's free. Which is, as I have a relationship with you and your bank, you guys give the wealth manager for free. And
so we'll queue up a meeting. Obviously, we'll have a conversation. Obviously, when there are costs associated with managing money, because it is a service, right?
Yes.
But what is critical right now, especially, you've got business owners that are nearing a transition point, right? Mm-hmm. The next 3 to 5 years, we're talking about, what does succession planning look like? And the reason why we're talking about that is because, if you just look at the market right now, there are, some people are choosing to say, hey, this pandemic thing, I am done, right? Doctors are selling their practices, and, or dentists are, or people are buying in, CPAs are buying books of businesses for, people that are retiring. So that 3 to 5 years, so you and your banker should be talking, obviously, hopefully meeting every 90 days, talking about the next 90 days. But as you kind of bring in more of the wealth team, what's on the horizon for 3 to 5 years, right? Let's put things in place today that will benefit this transition point, so that if you've got a junior associate that wants to buy into the business, I can lend the money to help with that. So I know we've got to depart, but I really appreciate you giving me the opportunity, to kind of talk about what we do and why. My goal today is hopefully to supercharge the conversations that your clients are having with their existing banking team and with you, obviously, as their CPA. But if there is a mismatch, if this is not happening, please pass on my information. I would love to at least have a conversation to find out, share who we are, what we do, but most importantly, why, and learn that very same thing from a client, who they are, what they do, and most importantly, why, with the idea of who benefits, right? Some business owners, their business is just designed to feed their personal desire to acquire things.
Exactly.
That may not be a great client for me because I'm looking for someone who wants to grow the value of this business and is hopefully looking to benefit their heirs long term. That relationship is one in which money is designed for its purpose as intended, which is to grow.
Money is made to grow. You guys heard it from the banker, one of my extraordinary bankers that I know. Keith, I am so happy you've joined again. Guys, this has been Business Combos and Coffee, and you guys know my statement, the more you know, the more you grow. And what Keith said beautifully ties into that. The whole purpose of money is for you to grow it, guys. Thank you for joining me for coffee this morning. At our firm, X Financial, we believe that small business is truly the heart of community. It's a part of our mission because we believe that when small businesses grow, communities grow. And when communities grow, families grow. And when families grow, we have generational wealth and equity. So that's what we have for you guys. We're signing off. Until next time, don't forget to move your profit in the right direction. And that's up.
All right. Thank you.